Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. And today is Thursday, March 26, 2020, and we again find ourselves in the final hour of the trading day. As I mention each day, in my opinion, the most valid time to make your buying and selling decisions is right at the end of the day, right as the large financial institutions start taking over the price from the day traders and the algorithms. They have the most money, they have very smart people, they're using the best technology, and during the day you have the algorithms and the day traders, they're just moving it. I consider it mainly noise. At the end of the day, the large financial institutions come in, take control, move the price, and although they're not always right, I think they're right more than they're wrong, and that's why I do my piggybacking on the back of what they're deciding to do. So anyway, thank you so much for coming today. I appreciate it. It's always nice to see everyone. Always look forward to the group. I think we have a great group, so many smart people, so much good insight and good comments. Right as I was going live on the YouTube channel here, YouTube said that it couldn't connect and live streaming wasn't available. So I was like, oh no, what am I going to do? So I messed with it a little bit and looks like we got it up and going again. So if that happens in the future, you'll know why. So it's been all sorts of challenges with YouTube lately. So if I'm not here or the channel is not live one day, most likely that's what happened. But anyway, it looks like we're up and going, so that's good. So, hey, Dan is here. Salutations, bud. Good to see you. Thank you. Salutations right back. Kamal is here. Good chatting with you today, Kamal. Always nice to have you here. Always appreciate chatting with Kamal during the day. Zach is here. Hello, Zach. Good to see you, my friend. Nice trade on Beyond Meat today that you sent me. Hello, Brian. Good to see you. Really proud of you. Brian's a young man, and he's spending his time looking at a trading and investing site on YouTube instead of playing video games. Very good. I'm proud of you, my friend. Always nice to see you, Brian. Hey, Miko25 is here. Hello, how you doing? Good to see you, and look forward to our lesson on Saturday, and I think we had a good first lesson, so look forward to the next one. Hey, Gamer is here. That's David from Colorado. Always nice to have you. Frank, hey bud, good to see you. Nice to have Frank and his poems. Hello, Greg and group. Hello, Frank. Joe Turner, hi everybody. Hey Joe, good to see you. Always nice to have Joe and his poems as well. So, all right, well, listen, we're having another one of those kind of crazy days. We are up 1,000 points, although you have to remember we were up a lot yesterday. We gave it back at the end. So I guess this is the new norm. 1,000-point days. I imagine it will settle down sooner or later, but Dow is up 960 points, up 4.55%. NASDAQ is up 291.52 points, up 3.94. And the S&P is up 114.05 points, up 4.62. So it looks like the Dow is getting, it looks like the S&P is getting the best of it today. All right, well, listen, here's the plan for today. First of all, we're going to run that U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions, going to talk about when I bought them, why I bought them, what my thinking was, what the strategy was, and then how I'm going to manage them going forward, right? You always need a plan getting in, and you need a plan going forward. I don't think we have any trades on from yesterday, although I may have accidentally deleted some. I know Bing He had one, but it looks like I accidentally took it off the chart. So if Bing He's around, maybe he can update me on that trade. I know it was long. It was eBay. That's right. It was on eBay. After that, we're going to spend a few minutes on trader psychology. I was talking with Dr. Jorgensen this morning, and he's been following this channel, and he's a good friend of mine, over 30 years, and he's been in the market a lot, but he says, Greg, the more I watch the channel and what's happened here, the more I realize just how important that the psychology part of trading is. And it really is. I mean, you have to learn support, resistance, technicals, but it's not rocket science. I mean, it's really not. It's much harder you can create a plan, but it's way harder to follow your plan emotionally than it is to put together a trade plan, because it evokes all those emotions, fear and greed. And man, I get it. I have been there. So, the best way to deal with that, to stick with your plan, really across the board, the best way is just to reduce your position size. So the wins and the losses are not as big, and they don't amplify up your emotions and make you make an emotional decision. So we're going to spend a few minutes on that, like always. Hopefully by going through it each day, it'll seep in deeper and deeper and deeper. And one day you'll go, wow, you know what? It really is important. The psychology is the most important. So we're going to do that. Then we're going to go down through my watch list. I have 3 requirements when I look to enter a stock. And all 3 of them are very, very important. The first requirement is I need a confluence or a combination of indicators. I look at each indicator as a potential group of buyers. You're going to increase your chances dramatically to have a profitable trade if you are in the company with as many other groups of buyers. So therefore, if each indicator like MACD or RSI or moving average represents a group of buyers, then having them all come together at the same time is really going to increase your chance of having a profitable trade. Doesn't mean it's going to happen, but it will increase your chances, in my opinion. Requirement number 2, very important also, you have to have a good risk to reward ratio based upon the resistance above you compared to the support below you. It has to be realistic resistance above and realistic support below. But if I'm going to risk $100, I want to make sure I can make at least $200 or more to the upside compared to what I'm losing. And then number 3, most important in this current market environment, is correlation of your positions. You do not want to have too many correlated positions. There's many days where Amazon and Google and Microsoft and Apple all line up on the same day with the same maybe great setup. And, you have to be careful that you don't go, oh, this one looks good, this one looks good, this one looks good, and this one looks good, and you take them all. If they all go up together, great. But if they all go back, they're probably all going to go back down together as well. And if you run into that, then you get hurt even more, 2, 3, 4 times compared to what you would have. Because sometimes, tech does well one day, but maybe healthcare did well that day. So it's important to, not be too heavily correlated. Spread your positions out, spread the industries out. Maybe you have an auto, maybe you have a tech, maybe you have a healthcare, maybe you have an insurance or whatever, right? And the plan that I have for myself that has worked well is I never take more than 1 correlated position in a day, meaning that if I had a gold and a silver signal me for both of them on the same day, I would not take both. I would only take 1 industry per day. I can have a gold and a silver as long as I have them on separate days. And then account heat is super important. I don't care if I have 6 completely uncorrelated positions, but I'm not going to take more than 60% of my capital. I'm not going to put more than 60% of my capital at risk in the market ever, ever, ever. And this is something that I learned from Steve Burns a couple years ago, and it's a really good policy. So those are my 3 criteria. We'll go down through the list. If something looks good, I'll mark it initially. Then at the end of the day, what my goal is to whittle down those candidates down to the best candidate, and the best candidate's going to be the one that has the best technical setup, multiple indicators lining up on the daily, and ideally, I'm gonna, if I have the same amount of indicators lining up on the daily and I couldn't choose between the 2, well, then I'd switch over to the weekly as well and see what that looked like. And if one looked better on the weekly, that would be the one that I would take. So if I can find one, I'm not sure I'm going to find one, but if I do find one that qualifies, I'll take that position right at the end of the day. And then after the market closes, if anybody has any questions for me, please let me know. If you need clarification on anything, what I was doing, what I was thinking, or how I explained it, please let me know. If there's any stock symbols that you would like me to take a look at after the market closes, I'm very happy to do that, give you my humble opinion. And then if there are any potential stock symbols that you think would be helpful for the group to look at and you like my opinion before the market closes, please let me know, put a star by it, and I will do my very best to get to that and do some comments on it before the end of the day. So that is the plan for today. So, all right, hang tight. I'm going to run that U.S. legal disclaimer and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for sticking through that with me, everybody. Okay, Joe's got a poem for us. Everyone thought that we'd be in for a shock, but the jobless claims did not affect our stock. The way of the market are now slowly fading. The ways of the market are now slowly fading with algorithmic computers. Who knows who's trading? Everyone thought that we'd be in for a shock, but the jobless claims did not affect our stock. The way of the market are now slowly fading with algorithmic computers. Who knows who's trading? Bravo, Joe. Thank you, sir. Spot on as always. Not only do Joe and Frank write excellent poems, but they're very they have to do with what's current events are going on in the market. So it's just amazing. Thank you, Joe. Hey, Mount Doji, good to see you, my friend. Bob is here. Hello, everyone. Hello, Bob. Nice to have you here. Frank says, with Dow 20% off the lows and S&P 16% off the lows, anybody want to pick resistance? Well, if anybody has any thoughts on it, let me know. Me personally, I think we're close to there, to be honest with you. Mount Doji says, Cisco kind of looks good. Well, we do have this little fake out bar. Here's day one. Day two, yesterday went up, came back down to a V1. That's why it painted this green triangle here. So this looked bearish and was immediately followed back up with a positive bar. This is above 50. Yeah, you're right. Doesn't look too bad. MACD is positive. Good call, Mount Doji. And if we look over on the weekly, we are above the 200-day moving average. So the 200-week moving average. So yeah, you're right. That does look pretty good, actually. That does look pretty good because we had the day one. Yesterday we went up, reversed right back down with the V1, and today we negated that whole reversal with a move back up. Yeah, good call, Mount Doji, and we are above 50 RSI. Me personally, I probably wouldn't buy this unless it closed over 50, and then I'd use that 50 as a stop. But yeah, nice call. Frank says, Joe's right. Wall Street is able to function without the trading floor. Oh, that's right. We don't have a trading floor. I wonder what that will bring for the market. Hey, Marco, good to see you. Always nice to have Marco here from Slovenia in Europe. Hope you're having a nice evening, Marco. Thanks for coming. Mount Doji says, Intel caught my eye. Yeah, I think Intel's over the 200, right? It's battling there, right there, isn't it? But same with Cisco, Mount Doji. You know, having this, I believe this is a V2. Yeah. So this would be a V2 with a close back over the 200-day moving average. Now a V2 back over the 200-day moving average is better than just a break over the 200 moving average, in my opinion. Daily MACD is positive, so that's always a good thing. And on the weekly, yeah, I mean we've moved over a lot of these moving averages. So yeah, good call, good call. But again, for me to be interested, it'd have to close over the 200-day, and it would have to close over the 50 RSI. Now Doji says, yeah, making sure it closes over the 50 RSI. All right. Let's take a look real quick. Just, Joe brought up, right? No, Frank, sorry. Frank brought up, the markets here. So here are the indexes. Look, obviously we've had a big rally off the low. We had a false breakout to the downside. What concerns me is this V pattern. Sometimes V patterns work, but most of the time, on average, they don't. You can see right here, we're at a 44.72 RSI. The way that I look at markets, let's see, at the high today, we were approximately 46.36. Wouldn't surprise me if we went up a little bit more, but I would, as far as looking at the indexes, a close over the 50 RSI would be positive, but we've had this big move up. I just look at this as possibly this might be a level where we are going to start to really run into resistance. Another way to measure this would be from, let's take a look. From a Fibonacci, if we go back up here to the highs, back down to the lows, we might get up here, 238 on the DIA. It's possible we could get up. That wouldn't surprise me to run a resistance, a halfway move. We went from here down to here, and then we come back up here to a 50%. That would dovetail nicely with the -1 ATR channel. So it's hard to know. We never know. We can't really speculate. As it's going up, great. But, right maybe somewhere in this range here is, I think, would be my opinion, but who knows. Let's take a look over here at the Qs. Qs are to 46.35. 50 RSI would be probably right up here around the 250-day moving average. Will probably act as resistance above us. In addition, it would have a confluence there with the 50 RSI. Maybe it'll get right up to the 200, but yeah, I'm a little concerned. The SPY 44.58 was a little higher earlier today, but same. As we get into that 50 RSI level, I think you're going to find kind of a ceiling there. Maybe it will blast right through it. Maybe, I don't know. Well, I don't know for sure. If it is able to blast up through that, I'm sure it's going to have some pretty significant resistance up here at the 100. And this goes for a lot of charts. This is a lot of charts have gone 30, close up to 50. I haven't seen a lot of them break over 50, although Mount Doji just pointed out Intel and Cisco. But that, to me, from what I've seen, is more of an exception than the rule that's able to get over 50 RSI. All right, let's take a quick look right here. Hey, Steve Burns is here. Good to see you, my friend. Always nice to have you here, Steve. Always an honor and a privilege to have somebody of Steve's stature and wisdom and all the great books he's written and all the great website that he has, newtraderu.com, all the great things he puts out for us. But thank you, Steve. It's always nice to have you here. I never take it for granted. And, I appreciate your comments in the chat, and I know everyone else does. So Steve says, thanks, Greg, for doing this live and giving us a place to hang out into the close. Well, thank you, Steve. You are certainly welcome, and thanks for being here. Disney. Okay, so, Disney, this is a little bit longer term trade. As you know, I did sell puts down to $50. It gives me over 50% protection to the downside. I would be responsible for buying it down here at $50 if it gets down there, but I do feel pretty good about the protection that I have down here. I was able to get $375 per contract. On an annual basis, this turns out to be somewhere between 9 and 10% by selling these puts, and I'm very happy to get 9 or 10%, especially with that much protection. They expire on January 15th, 2021. So I'm essentially running out the clock on this trade. With this put trade, I'm running out the clock. And the nice thing too is if you take the bottom here on the top, it's a little bit below 50 RSI, but from a Fibonacci standpoint, it should have some support as well. Actually, you'd have to go back here. So yeah, it is about 50%. So anyway, feel pretty good about this one, up nicely on this one for sure. So this is a little bit longer term one. Qs, same approach with a shorter expiration. This expires on 6/20/2020. So I have about 3 months on this one. As long as the Qs stay above 130, I'll be able to keep the $350 per contract. Like I said, on an annual basis, this is closer to 9% annualized return with a whole lot of protection. Is it enough? I don't know. We shall see. But over 30% protection to the downside. So that one's looking good. The SPY, all right. In case we have some new viewers today, I quickly want to go over this, but I do buy the SPY every day at the close of the market. I hold it overnight and I sell it first thing the next morning. It has nothing to do with technicals or support or resistance levels or anything. It just has to do with the numbers of this back test. So this is from Liz Ann Saunders at Bespoke Invest on Twitter. This back test, they tested it every day since 1993. They tested 2 approaches. Approach number 1 was buying SPY at the open each day, selling it in the afternoon at the close. If you did this every day since 1993, you'd have returned a negative 13.9% return. However, if you bought the SPY at the close, like I do, sell it first thing the next morning, over time, every day since 1993, you'd have returned 634.2% return. Past performance is no guarantee of future results. That is true for any trading approach. But the blue line is the buy in the afternoon, hold overnight, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see there's a clear difference. This one, the buy in the afternoon, hold overnight, sell in the morning, has been extremely profitable over time, and the buy in the morning, sell in the afternoon, not so much. So, you know, looking at this chart, it seems like, oh, this would have been a great trading plan, right? And it would have if you look at it in the long term. But in between, look, you have a year and a half down, you have a year down, you have like a year down here. And I'll tell you, in March, what a disaster this trade has been. But 2019 was very profitable. 2020 has been very unprofitable. But, you know, the key here is taking a small position size. So if you do run into a drawdown, you just don't get disgusted with it and quit. You know, I mean, the last 4 days have worked well on this. I'm glad I didn't just, you know, call the game and get out because I'm tired of it. Because I felt, not strongly, but I felt like, okay, you know, we've had a bad run here. We'll probably have a good run. But anyway, I'm in this for the long term. With the SPY trade, because of the volatility and because we've been under the 200-day, I've only been taking a quarter position. So that being said, I did buy SPY yesterday at the close at 246.79. Sold it this morning at 249.26. Looks like a little gain there, but honestly, that's not a bad trade overnight to be able to make, you know, almost, well, just a little less than 3 points, not quite 3 points, maybe 2.5 points overnight just for the hold overnight. Higher than it is, but you can see the last few days have been good. Buy, sell, buy, sell, buy, sell. And then we had a couple over here, but nowhere near to being profitable using this trade so far, but I am going to continue with it with the conservative position size. Apple is a call position. I did buy calls expiring on 6/18/21. So this gives me a year and 3 months for Apple to recover. I've liked these long-term trades, calls on some of the best companies like, you know, Amazon and Microsoft, MasterCard. I think with the current situation with the virus, that we need time on our side. Hopefully, I don't know for sure, but I think things will get back to, to normal in over a year, we hope, right? Give us time to possibly get a vaccine, work through this. But the thing I like about calls, especially on a quality company like Apple, is that I have a defined risk. So if I'm wrong, I'm wrong, just for defined risk. I can't lose any more than I bought the calls for. And if I'm right, I could, have 2, 3, 4 times to the upside on these calls. So I bought 250 calls. It's at 252.92. So, they consider that in the money call. So far, so good. And XLF, this has been a great trade. This was a great setup. We had a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 2 closes above day 1's close. We had a false breakout from this low over here. We went under 30, over 30, under the negative third ATR channel, over the negative third ATR channel, under the 5-day EMA, over. And so far, it's been a great trade. Did hit one profit target today, but you know, this trade is up 7.41% so far in 2 days. So nothing wrong with that. I did only take a quarter position on this trade, again, because of the increased volatility and because we're below the 200-day moving average. But I'm very grateful for this. It's at a 43.36, like with the indexes. I'm looking for, well, here would be the 50 RSI if we got up here. So, you know, my plan on here is get out if we reject the 50 RSI. My ultimate profit target on this is up here at the third ATR channel. If we move more than one ATR away from my entry, and then after that it closes below the previous day's low, that would be my trailing stop. So I have a total plan in place for this trade, and I have been phasing out, which is nice. I've been taking some shares off the table, so even if it does go crashing down, I've taken some profits and would mitigate the loss of the downside. Okay, I did have a day trade today here on the VIX. I had a good setup. It turned out to be a loser, but it was a good setup. And you can see 39-minute chart, we're above the 1 ATR channel. We came into the value zone, and then we had that sideways movement, which is what I really like. So we kept going down, down. We had 2 days of 2 bars of sideways movement. Then I had this V2 entry. Here's day 1, day 2. Day 2 washed out day 1. Day 3 close above day 1's close. Bought it here at 47.35. Went right my way, then came back down, and I had to get out here for a loss at 46.69. So I entered at 47.35, got out at 46.69. I got out because this bar closed below halfway of the washout bar. You know, it could have gone off. It could have gone way up and given me 2, 3, 4 times the amount I was risking to the downside, but it didn't go my way, and I had to get out for a very, very small loss. But that's the key to trading, right? Identify a good setup, put the setup on, make sure you have a good risk to reward ratio. If you're wrong, it's okay. You have no control over it. Just take your small loss. But when you're right, stick with it and let it get you that 2 or 3 times what you had been risking on the downside. So a lot of sideways movement still. Look at this. So we know about sideways movement. This is probably either going to I don't know if it has to be today, but you know, the more you go sideways, the more, when you break, you're probably going to break hard, either to the upside or the downside. You don't know which way, and unfortunately you don't know when either. Okay. Frank has a poem for us. Hey, Bing He, good to see you, buddy. Hey, I think I accidentally deleted your eBay trade. Oh, there it is. It came back up. So Bing He bought this with the, looks like under 30, over 30, under the negative third, over the negative third at 27.95. Now we're at 29.86. Nice going, Bing He. If there's any changes to that, let me know. Frank says, Frank has a poem for us. Oh, great. A passion for trading will keep you in the game. If it's only for gains, it could drive you insane. So keep your mind on the trade and know that it's true. Success is measured in loving what you do. Beautiful, Frank. Thank you so much. A passion for trading will keep you in the game. If it's only for gains, it could drive you insane. So keep your mind on the trade and know that it's true. Success is measured in loving what you do. And that is so true. I mean, you know, if I never got paid a penny for trading again, I would still do it because I just love doing it, right? So it helps if you love it. If you really don't like trading, if you really don't like it, it's probably not for you. I mean, you do have a passion. Frank or Joe likes that. We love it, Joe. Okay. So listen, This is the time of the day before we take a look at my potential trades for today, before we go through the watch list and try to narrow down some candidates for me to possibly buy at the end of the day. I do like to spend this time and talk a little bit about trader psychology. There's some really good Facebook and Twitter channels out there. They're traders. They've been in the game a long time, or they understand trading psychology a lot. And one of the best ones out there is Trading Composure, at Trading Composure on Twitter. Great channel. Boy, he really gets into the depths of trading psychology. And every time I read one of these posts, I was like, man, that guy is spot on. So if you haven't subscribed to him, I really would. But let's see what Trading Composure has to say. Accept small losses, but protect yourself from the big ones. Okay, we know this, right? The formula for making money in trading is to have small losses, have small gains, have big gains, have scratch trades. All those are fine. But the one that you cannot do is, what you have to do is protect yourself from the big losses. Keep exposing yourself to the market. The profits will take care of themselves. And this middle one is really what kind of struck a chord with me, because in this kind of market, in this kind of environment, after you've had loss after loss after loss, you just want to quit, right? It takes the wind out of your sails, even if you've been position sizing small and your losses aren't that big. But it gets a little burdensome when you're just loss after loss after loss. But in my opinion, professional traders, you have to keep taking those positions, not reckless positions, not revenge trading. But if you get a decent setup, even if you've had a string of 10 losses in a row, in my opinion, you have to keep taking those, because the ones that you don't take very likely are going to be the ones that go up, right? You remember I that one day I stopped with the overnight SPY trade, and it was an up day the next day, right? But I had to have a little talk with myself, and it was really basically about this. I mean, yeah, it was, I don't know, 7-8 days down. I'm like, oh my gosh. But in my experience, just like, I think it was Glenn that said, hey, is that an indicator when Greg stopped taking his trade? And it probably was. So, if you've been in a string of losses and you have your trades and you have a valid trade setup that comes up, in my opinion, you have to take it. But it's okay to cut your position size. That's fine. Cut it to 25%, like I did with the overnight SPY trade. Cut it to 10%, cut it to 1%, but at least keep taking those trades. Unless you're to a certain point in your account where, hey, if I lose this much, I'm out, that's a different story. But accept small losses, but protect yourself from big ones. Keep exposing yourself to the market. The profits will take care of themselves. Expose yourself to the market if you have a proper setup, and it's totally fine to reduce your position size. So thank you, Trading Composure, at Trading Composure. Really appreciate that, and that really resonated, and I hope that's helpful for people. Okay. Joe says, thoughts on CVS? Oh, let's look at that. Well, we have kind of made this base. We rallied, we came back, we've tested it. We have a V1 technically. Here's day one, day two. Day two did go under day one. Didn't really wash it out enough. We're back in the value zone, which is good. I'd like it better if this were a bullish engulfing bar, which it's not. I'd like it better if we had a double bottom with a bullish divergence, red MACD, green MACD, red MACD, but less MACD than the first one. I would like that a whole lot better. It's a 44.93. It's getting a little rich up into the 50 RSI level. Let's look at the weekly. It's okay. I honestly don't see a real setup here. Doesn't mean it can't go up, but for me, I don't see a very clear setup on this. One thing I wanted to mention, if we look on the Dow, you can see we're up today on lower volume. The Dow has had more volume for sure. But if we look at the Qs, look, this rally, the last 3 days rally, the volume has gone down and down and down. To me, that is a bit of a bearish sign. The moves down had high volume, the moves up have low volume. So that's a little concerning to me. Let's look at the SPY, same thing. You know, we've had this V, we've gone down on high volume, we've gone up on lower and lower and lower volume. So fewer people are participating in this rally. So that's a little concerning to me. If we look at the IWM, same thing. We did have a big day here, but here we went up on lower and lower volume. So just something to keep in mind, something to, you know, crunch some numbers on when you're thinking about taking trades. All right, so as you know, this is my new little segment. Not really a segment, but before I look at today's possible setups, I just want to remind myself, and I want to remind everybody, this is really good advice. Choose wisely today, right? Choose wisely. If you're going to take a position, make sure it's valid, make sure it has all the requirements that you need. But I think this is a good thing for all of us to look at, and myself, before making end of day decisions. So choose wisely today, from Diane Cooper. All right, with that said, let's go ahead and take a look-see. Oh, one thing I forgot to mention, I did buy I manage a friend's account, and I did buy some long-term calls on oil today for him. This is USO, this is the tracking. $5 calls, right now we're at $4.75, so these are considered out of the money. These expire January 15th, 21. $1.31 per contract is what it calls. So that's per contract. So that's as much as I can lose, or that he can lose, $131 per contract. The reason I like it here is, you know, we've been going down, 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 down. Momentum has been going down. We finally started making a base here, which is somewhat of a good sign, right? We're not going up, but we're not continuing to go down. And when you buy calls, you know, it's always best to buy them when volatility subsides, because then you get the cheapest price on them. So we have been moving sideways. And as you know, when things move sideways, they're either going to break one way or the other. We just don't know what direction and which way. But, got these calls here when they were down quite a bit today, but still inside this range. He has a pretty good belief that oil will be higher. Who knows? We don't know, right? We can't predict, but that was his theory. But looking at the chart pattern here, probably not a bad time to buy calls, because you get them cheap, and we've stopped going down. With the implication, can it go back up? Well, it certainly can. It can certainly go down as well. One other thing, you can see how we've been going down, 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 down. But even though we've been going down, 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 look at the RSI. See how low it was over here? See how now we're lower than that, but the RSI is high over here. So that is the price going down with the RSI reading going up. So that is a bullish divergence. So, all right, didn't want to forget about that one. Burke is here. Good night, all. Hello. Good to see you. Burke, are you telling us good night? You're going to bed? Or good evening to all of us? I think you're telling us the latter. Frank says, V comes before W, not just in the dictionary, but often in charts. Ah, so true. I don't like buying V bottoms. I like buying a higher low V1, which essentially, if it goes up, creates a W also. Does that make sense, Frank? I would much rather, because the people, let's take a look at this real quick. The people that were fortunate enough to have bought Qs down here or the Dow down here, they have made a lot of money, right? As soon as this starts to get a little janky, as soon as it starts to get a little weak or squirrely, they're going to lock in a 10 or 15 or 20% move, which will cause selling pressure and supply to come into the market. I would rather buy when a new group of buyers comes in off that low and creates a V1. Man, that's classic. V comes before W, not just in dictionary, but often in charts. Frank, you should put that on Twitter. You should put that on Twitter, because that's something for people to think about for sure. And I don't know if you're okay with me putting that on Twitter, but I would credit you with that. But I mean, that's fantastic. I mean, man, Steve, isn't that good? V comes from before W, not just in dictionary, but often in charts. So true. Brian says, I'm buying USO calls, but it wasn't sure if now was the good time. Well, look, you got a good point. Brian. There's no real signal, to be honest with you, right? There's no real signal, but if you take everything, if it's not a bad time to buy calls, I can tell you that. They're very cheap, and the sideways movement could lead, but there's not a precise signal on buying that. But again, this is what I do for a friend of mine, and that's what he wanted to do. So, but not, all in all, not a bad place, especially if your trade idea is that it is going to go up, but who knows? We're going to find out. Sorry, here, 11:40 p.m. Well, thank you for staying up late, for sure. All right. Steve Byrne, that is a great chart pattern quote. Man, isn't it, Steve? That's fantastic. All right. Well, let's go on down through the watch list here, see if something qualifies. Well, look, here's Apple, right? We had this V1 to the downside, which paints the green triangle, close below the 200, then we're back up. So, here you have two signals. You have a V1 to the downside that got overcome the exact next day, under 200, over 200. It's not bad. The 44.72 RSI concerns me a little bit from a short-term trading standpoint. I don't think there's anything wrong with the trade. It gives you a good risk to reward. But I'm not going to take this just because I already have the Apple calls. And I just don't want too much correlation in Apple. So, but not bad. If we look over here on the weekly, a V1 here on the weekly, which is good. Back over here, we're at a 45 RSI on the weekly, and we're at almost a 45 RSI on the daily. Look, if you wanted to trade Apple long term, yeah, sure, buy it here at the 200 and get out if it closes under, or just keep it until it, either rejects the 50-day moving average, or rejects the 70 RSI, or rejects the 50 RSI. All three of them are completely valid. They're just, one option is going to be a longer term trade than the other, but nothing wrong with any of those options. The only thing you have to make sure is you stay out underneath the 200. Okay, quick. Adobe has just been up and down and up and down and up and down around the 200. Did Apple have a MACD crossover? Almost, not quite. Boeing has been a monster, really no signal here other than, you did have the sideways movement and the stabilization here. We're at a 44.69 RSI. Just too high for me, but if anybody bought down there and had the courage to buy down there, congratulations. Berkshire Hathaway, V formation. I don't see anything here. Beyond Meat. Oh, it's down now. So I know Zach had a good trade on this today. Under 30, over 30, under the negative third ATR channel, I believe on the 5-minute chart. Had a good little trade here. But this is what I'm concerned about. I'm concerned about the low, the rally, getting close to the 50 RSI, and then the failure, right? That's what I'm concerned about the market in general. If this could go down a couple days, then get a V1, higher low V1 back up into the value zone, then I might be interested. MACD crossover today. Caterpillar, same thing, right up against the 50 RSI. Dow, we already looked at this, hasn't been able to break the 50. Walt Disney, of course, I have those long-term puts. Etsy, rejection of that 20-day and probably the high 40s RSI. Facebook up nicely today, has the green triangle. Day 1, day 2 went above and then below, and then this looks like it might close here. MACD is positive. Looks like we're finally going to close above the 10-day, but I'm sticking with my guns. I think we're going to have resistance at the 50 RSI, and I want to look for a higher low V1, V2. Gold. Well, shoot. Gold got us yesterday, didn't it? Right at the end of the day, the 5 did not cross over the 20, so I didn't take the trade. It sold off right at the end of the day. 520 crossover is a good back-tested approach with gold. MACD is positive. It's off its high, which I'm glad a little bit. I'm still going to plug my nose, hold my nose, and take a position on this using the 520 crossover. I'm going to use a half a position because of the volatility. My trade plan for this one is get out of half position. If the price closes below both the 5 and the 20, get out of the full position. When the 5 actually closes under the 20 to the upside, look for a rejection of the 70 RSI or a huge big reversal volatility bar to the downside. Google painting the green triangle here, not bad. Looks like Google might possibly close above the 10-day moving average in addition to this fake out bar. Day 1, day 2 goes above day 1, closes below, looks like it's going to go down. We get an immediate move back up. So, you know, the close above the 10-day, the close above back into the value zone, and the fake out bar and the MACD, pretty good, but I already have the Qs and I already have Apple. So what I'd really like to see is I would like to see some double bottoms with bullish divergences. We go from red to green back to testing that low, and we very well might test the lows again. You know, you don't know. Nothing on Goldman. Home Depot just had a huge run. Looks like it rejected the 50 RSI today. Had I bought down here, this is where I would be looking to sell if that was my trade plan, a rejection of the 50. But you know, I'm just concerned about the whole market in this area. But IBB, same pattern. Intel, pretty good. I mean, V2 close over the 100-day moving average, RS or 200 moving average. RSI or MACD is positive. Not bad, just not a lot of volume. Not a lot of volume on this move. IWM, no. Johnson & Johnson, nothing there. CarMax, looks like it got right up to the 50 and failed. Coca-Cola's had a nice little V here. Lockheed Martin, boy, I'll tell you, this is the one that got to me. I was thinking about buying this. I decided not to. It would not have been correlated because this is defense, but you know, bounced off the 30, came back above the third ATR channel, false breakout to the downside. That would have been a monster trade. But had I taken the trade, I would definitely be getting out today because it had rejected the 50 RSI. MasterCard actually down today. I did get out of my calls that I bought on MasterCard and had a nice profitable trade, and I did get out on those. McDonald's kind of stalling out there. Merck big day today here, but I don't see anything. Microsoft fake out bar, close back above. I'd like Microsoft better if it closed over the 50, but you know, it wouldn't be a bad idea for me to buy Microsoft over the 200, stay with it as long as it stayed above. But again, I already have tech and I'm very careful about correlation at this point. Netflix working on a higher low V2, right? We go up, we have that day down, not quite a V2 here. I'll mark that. How are we doing on time? Ooh, Nike, Philip Morris, PayPal, no. Qs, no. Silver, down today with gold. Interesting. SPY, have that in. Going to buy that at the end of the day. Teladoc up today. Came right into the value zone and bounced. Bonds up a little bit. Tesla down 4% today. Interesting. Could be looking for a higher low V1 or V2 on Tesla. Twitter. UAL actually down today. Looks like it has danger of losing the -1 ATR channel. Natural gas down. United Healthcare Group up, but running into resistance to that 50 RSI. Oil, of course, I talked about that. Bought the $5 oil calls out to January 15th. VIX had that intraday trade, and good thing I got out when I was supposed to, right? Okay. Verizon, Walgreens, Walmart, Energy up a little bit. My XLF trade's been doing really, really well here. Glad to hit one profit target. Real estate, it's just a V. Utilities, it's a V. Healthcare, it's a V. And Zoom, just too high for me. So really, the only thing that I see here, I mean, I do see a few things. I am going to take gold. Google's decent again, but I'm just too, I already have enough. Wow, look at Intel go here at the end of the day. Wow, that's strong. That's strong for sure. Lockheed Martin, too strong. Netflix, possible V2. Okay, I'm going to stick with gold today. That's what I'm going to do. Bing He says, took profits on eBay. Grateful, 6% profit. Awesome, Bing He. Look at SPI weekly resistance, too extended and hitting. Let's take a look. Well, at least the SPY did get off of is closing above the 200-day. That's positive. I think right around here is where we're really going to run into some resistance, but we shall see. John, hey, how you doing, John? Nice to see you, my friend. John says, I think the upside bet now is on chloroquine. Interesting. Well, John's been spot on with a lot of stuff, so that's good to know. Thank you, John. Frank says, chloroquine very promising, but surprisingly high doses of vitamin C on onset reportedly helped boosted by zinc. Yep, that makes sense. Joshua, 4-point candle on the SPY 1 minute. Oh, are you on the 1 minute charts? Boy, I have not been on a 1 minute chart forever. Wow, look at that takeoff, huh? How about that? Zach, my family and I have upped our vitamin C intake, and I am taking zinc, taking a zinc a day. Fantastic. Fantastic. Okay, so let me see what I'm doing here. Gold, I'm buying a half position because of the volatility. And it does look like the 520 is going to cross over. Let's take a look at gold intraday here. Ooh, nice V2. Nice V2. All right, well, I guess I better just wait till the end, right? Cisco running up now too. Let's take a look at Mr. Cisco. Yeah, it is. What's the market up right now? Oh my, 1,200. Ooh, am I glad I got out of VIX when I was supposed to, huh, everybody? Well, this is all good. Everything's going up. Disney and the Qs and Apple and XLF, and oil's recovered quite a bit. Bob says stores are out as I can. I wouldn't be surprised. I think you know, Bob, right? I actually started the company originally that invented Zycam. Boy, that was an interesting time. That was an interesting time. But I think you know that. I think that's why you're bringing up Zycam. But yeah, you know, we started a little chewing gum company, and we were developing a cold and flu gum. And out of the cold and flu gum idea came Zycam. Isn't that amazing? Frank, humans, unlike animals, do not make vitamin C, only through food or supplements. Oh, I did not know that. Animals make vitamin C? I didn't know that. Hey, look at XLF cranking here for us. We might hit that second profit target. Come on, baby. Come on, baby. Get on up there. What's gold doing? Yep. Glenn says, hey, Greg, watching 200 SMA weekly to see if the S&P hits resistance at 2643. Are you using the 200 EMA, Glenn? Because on my charts here on the weekly, we are up above the 200, but I'm using SMA. Oh, come on, XLF, get on up there. Yesterday I bought SPY on sale in the last few minutes. Today it looks like I'm going to be watching the, going to be buying premium. All right, we have 4 minutes. Gold's just kind of hanging out there. All right. All right, I'm going to go ahead and buy gold. I have to do this in a couple accounts, so I don't want to wait for too long to do it. Okay. So gold, I bought at 153.75. And then we'll see what the SPY comes in at. Two minutes. Frank says, that is correct, and even animals have benefited from additional vitamin C. Well, I imagine Zicam and Emergency's selling pretty well, right? Zach says, Greg, why did you end up getting out of gum? Was it mainly to go into business for yourself? Was that when you became a trader? Yeah, it is, Zach. What happened was we developed Zicam. That was such a huge product for us that it was such a much larger business for us than making gum. So what happened was we sold our chewing gum plant to Wrigley's. And at that point, I was pretty much done. And that is how I got into trading. Thanks to Dr. Jorgensen, who's in the chat here maybe today. He's the one that got me into trading. So we can either thank him or blame him for doing that. But that's why I got out of the gum business, Zach, because we sold our factory to Wrigley's. So you guys are saying 200-day moving average on the weekly. See, I don't see it. Maybe you guys are looking EMA, but being he says he's using SMA. Oh my, I'm going to have to buy this SPY at this super, super expensive price today. Again, quarter position only. Okay, there we go. All right, I bought gold to 153.75 and I bought SPY at 261.20. bought SPY with the 520 crossover. 153.75. Okay. Again, trade plan on this is get out of half of my position if the price closes below both the 5 and the 20. Those are the moving average that I used for the crossover to enter the trade. I would get out of half the position. If the 5 then crosses back under the 20, I would get out of the full position to the upside. I'm going to phase out. I'm going to use the 6 ATR channel is my ultimate profit target. I'm going to phase out as it goes up. If it goes up, I will get out with the rejection of the 70 RSI or some kind of big, huge reversal bar to the upside. So that's the trade plan for gold. And then SPY. $261.20. And that's the overnighter right there. Boy, I'll tell you what, I've been very grateful for these last 4 days. I've had 4 great up days. Definitely has not got me even for the year, but if you remember, I was telling you before, my goal is not to get even on the year. My goal is to just chip away at some of the losses that I had in the last 2 months. I mean, it'd be nice. I'm not against it, right? But I'm trying to be realistic here and just mitigate the loss, which in the last 4 days has been fantastic. It's been a big percentage of those backs. So grateful for that. Remember, we need to stay in this for the long term, right? We're not trading for this week or this month. You know, I'm looking years down the line, and I don't want to lose my account. I don't want to blow it up based upon, you know, one point in time, right? I know there's going to be ups. I know there's going to be downs. That's why position sizing is so important, everybody. It's just part of trading, right? So let's take a look here. If you have any other questions, oh, wait, here we go. Being key, Greg, SPY and SPX is different. Oh, you're saying SPX. Sorry. Yeah, there you go. There's the SPX. You guys are right. Right up against the resistance of the 200-day on the weekly. Nice going, Being He and Glenn, for taking a look at that. Dr. Jorgensen said, I'm here. Gum was really good to us. Zycam also. Yes, it was. Yep, for sure. Mount Doji, I only went in Intel. Okay. What did you get in? What did you get in at Mount Doji? We got a Mount Doji trade up on the board. This has been a minute since we've had one. Greg, you may have been the next Bill Gates if you had continued your gum business. Well, who knows? I don't think I would have been Bill Gates. I'm not that smart. Yeah. But hey, you know what? If Zycam is helping people through this, I'm glad to have been a part of that at least, right? Dr. Jorgensen, Greg started it with Buzzgum. I was his early guinea pig in the gym with his many bad samples. You know, yes, Dr. Jorgensen and I met many 30-something years ago at the gym, and I had just started to make Buzzgum, and I was getting samples from the lab, and it was like a caffeine guarana gum, and oh my gosh, did it taste horrible at first. But I was all pumped up for it, and I'd bring him into the gym and say, hey, try this version and try that version, and he'd chew it for about 4 or 5 seconds and go, where's the garbage can? I got to spit this out. Man, those were awesome times. I used to chew so much of that gum my ears would ring from the caffeine. But I was like, this is my gum, man. I can't believe it. You know, if you have an idea and then it actually comes to fruition, whatever it is, and it's in your hand, it's like, it's pretty amazing. But who would have known that just that little idea, Buzzgum, would have turned into Zycam? It's unbelievable, right? It's unbelievable. Mount Doji got into Intel at 55.50. Okay. Listen, before we get to other questions and comments, if you don't mind, just going to have to do my quick little plug, let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I love to teach. I do have a course. It's 5 sessions. Each session is between 2 and 3 hours. It's a really intensive course. It's one-on-one, so there's a lot of interaction. I teach you everything I've learned in my experience as being a full-time trader for 24 years. Everything I've learned from my coaches and mentors like Stephen Burns and Dr. Alexander Elder and Carrie Lavorne and Larry Williams. I think it's a great course. It is $1,000, but I think it's worth every penny. The course is a long time, right? We spend a lot of time together. The format of the course is I end up teaching you what I'm teaching you in that lesson. The second half, I ask you a lot of questions. I ask you to teach it back to me. I throw a lot of curveballs at you. We do a lot of chart study. I fire off questions. What's better between these two charts? And why is that? Where's our risk to reward? Is it a good setup? Give me the pros, give me the cons. We do a lot of chart study, just day by day by day by day. Okay, we entered. What are we doing with it here? Do we have a stop? Are we scaling out? So if you've thought about taking the course, and I think this is a great time. Everybody has a little bit extra time on their hands if they're self-quarantining, and it is over Skype, so there's no human stuff. But I do love teaching. It's been great. I feel like I have a really good relationship with all of my past clients. And so, if you're thinking about it, it starts with the free Skype call. I like to learn more about you, your trading plans, your experience, your challenges, your goals on that Skype call. And you can ask me any questions as well. It is free and there's no pressure. I don't worry about that. I would never want to pressure anybody taking the course. But, after the call, I think we'll know if it's a good fit or not. So send me an email if you want to set up that free Skype call. You can send it to my email, which is in the description down below of this video. And you can also send me a message on Twitter. But I think you'll like it. I think you'll be glad that you took it. I really do. So if you're interested, just reach out to me and we'll set up the Skype call. And then I am still in YouTube jail, as everybody knows. I'm not sure why. I did have a discussion last night with a YouTube expert, and he has had some of the same experiences. So it looks like Google, because they don't have a lot of manpower, they're letting their AI handle things as far as reviewers and so forth. And I read in a blog that they are being extra careful, especially with live streams, because they don't really have enough people to monitor it. That's what I understand. So it's not being shown in people's feeds. You can obviously still get here by going to my channel. But anyway, it's kind of a bummer. I hope it gets resolved. But, one other request, because of that, if you like this channel and think it's a good value, if you have some trader friends, I would really appreciate it if you would share it with them, or maybe even share it on social media. And then of course, as always, today, if you like today's, if you could hit the thumbs up button before you leave, I would also really appreciate that. That certainly would help. So anyway, there's my plug, there's my request and plea and all that kind of stuff. So anyway, thanks. Let's see. All right, so Mount Doji got in at 55.50. 55.50. Oh, Mount Doji is what I mean. Cisco just ran up too high for me at the end. I'm glad to hear that, Mount Doji. I mean, that is trading maturity when you realize, that you're starting to chase. I mean, it's a 52.53. I don't quite like it here at the 1 ATR channel. Even if your stop would have been back here halfway or underneath this bar, I would imagine that you're going to run into some resistance here at the 50-day moving average above. So I agree. Well, you could have used a stop below 50, which would have given you better, but I'm glad that you didn't get into both. I mean, Intel and Cisco are correlated. They're most likely going to move up together. So I'm glad that you just went with the one and the one that had the better risk to reward ratio, which to me, it looks like Intel. So nice going. It was a tough decision not taking Cisco. Yep, I get it, but I'm telling you, they're both correlated, right? If they both go up tomorrow, you're going to be really happy. If they both go down tomorrow, you're not going to be as happy because you're going to get double whacked, right? Dr. Jorgen says, good hike. Thanks, bud. Appreciate it. I think today's the day off for Dr. Jorgensen on the workouts, but I'll talk to you later. Frank says, why doesn't the flavor in gum last when chewing? Well, you know, some flavors last longer than others, like juicy fruit doesn't last very long, right? It depends on what kind of flavors they use. There's flavors and then there's flavors. And, you know, you can get the flavor to stay in the gum base longer if it's high quality. I can't remember now, but, you know, whether it was water soluble or fat soluble. But there are some, like Extra, lasts pretty long, right? But when you're dealing with the caffeine gum, oh man, you've got a whole other set of problems because caffeine is hard to mask. But we ended up masking it. Brian says, I want to take the course, but I don't have enough money. Well, you know, Brian, one day you will. And at least you're here now when it's free, right? And if you have any questions about anything, you just let me know. But hopefully one day we will have our courses together, Brian. Kamal, I bought a calendar spread slightly bullish on gold, 153 and 154. You want to... Kamal, can you elaborate on your calendar spread? I've never traded calendar spreads. I mean, I know you're buying different expiration dates. Bing He says, SPY long bullish bar with huge volume at 350 looks very suspicious to me. Last minute closed bearish with much higher volume, though. Somehow I feel tomorrow may be bearish. Hopefully I am wrong. So that's the index. Boy, was that a big bar. My gosh. That was a huge bar. I better go over here to the SPY where I get some volume. Look at that volume for sure. And you're right, Bing He. I mean, there's a lot of volume there in the last minute. Did anything happen? Did we get some news for this huge explosive bar to the upside? Yeah, well, I'll tell you, Bing He, just, you know, just from looking at this chart, we have a V on the SPY. We're very close to the 50 RSI. We have the 20-day EMA above us. Just like Frank said, we don't get a lot of, you know, there's more W's than V's. I just wouldn't be surprised. I mean, who knows in this crazy market? We could be going up here, but you know, if you got into this situation 100 times, I think more than 50% of the time you would fail somewhere near here. And again, look at the volume. The volume was not huge. The volume was not huge. I mean, we've gone up, 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 and the volume's gone down, down, down. So, you know, we really can't speculate. I guess speculate a little bit into the fact that I'm being pretty cautious with entering new positions. But again, you know, I have puts on Disney. I have puts on the Qs, directional on the SPY, calls on Apple, directional on the financials, and some gold. So I feel pretty good. You know, it's a mix, calls, puts, directional, you know, on some uncorrelated positions. Some correlated, some not so much, but Mount Doji says, back to work. Take care, everyone. You too, Mount Doji. Thanks so much for coming. Appreciate it. Glenn says, selling bonds and buying equities end of quarter could see the market push up even further. Could do. It could do. We just don't know, though, do we? You know, obviously there's some short covering going on here, or there has been in the last couple days. I imagine that. Bonds were up a little bit today. TLT was up a little bit. We could be looking at negative rates on treasuries. That is totally true. Let's see what's happening after hours. Apple's down. Disney's down a little bit. Gold's up a little bit. SPY's down a little bit. All right, so nothing major. So how's everybody else been doing the last few days on this up rally? Like, you always hear about my trades, but they're boring to me because that's all I ever talk about. Not trying to be self-centered, but they're the only trades I know about, right? But does anybody else have any feedback on trades they've been taking, how they've been doing? I know he had some good short position, then he had some bad short position, then he had a good, nice up move today on eBay. So I'm really happy to see that. I did see that Steve Burns also did take the gold trade that I took today. So always good to be in the company of a Steve Burns trade, that's for sure. Actually, Steve Burns took the double leveraged ULG. Hey. Well, let's get him up on the board. 56.28. All right. What did I do? Steve Burns. And we had another aftershock today in Utah. I didn't feel it. I read it on the news, so I guess we still have those. So there's Steve on ULG. That's double leverage gold based upon the crossover on the GLD, 56.28. All right. So we have Steve on ULG. We have Mount Doji on Intel. Yeah, I like that. I mean, there's a multiple of indicators here. V2, day 1, day 2, day 3. Day 2 washes out day 1. Day 3 not only closes above day 1's close, but also closes above the 200-day moving average. MACD is positive, over 50. Pretty good. Pretty good. And then if we look over on the weekly chart, back in the value zone, above the 50-day moving average. We shall see, right? All we can do is look for a good setup, take it. Something's going to happen, like Mark Douglas says, and if we're wrong, try to get out wrong slow, and if we're right, be a little patient with it and hopefully have a nice outsized trade. Back in 2008, we had the same rally from 28 October to November 4th, a 6-day bounce. Yep, we did. You know, what I would really like to see, not on Intel, of course, because Mount Doji has it, but you see how we made a low, we have the deep MACD bars, now we've rallied and we have green. You know, Dr. Alexander Elder would be looking for a test of that low, which would then give yourself a nice double bottom with a bullish divergence, whether that's on the Qs. You can see we've come back down, deep red, rally with some green. If we came back down and tested the lows, the MACD bars would be less. I already know that. So, you know, as far as me picking up another directional Q position, you know, outside of my puts, something down here with the double bottom is what I would be looking for. Possibly a break back over the 200. I think it would take a lot of movement to get us back over the 200, but you know, over the 200 is always better than under the 200. Kamal says, I bought the April 3rd 153 calls for 336 and sold the March 27 tomorrow 154 calls for 96 cents for a total of 269 per contract. Okay, so that's the difference between what he paid and what he sold the calls above, and he ended up being a debit of $2.69. The break even for this trade for tomorrow is close at around 156 on the upside and 152.40 on the downside. Glenn says turnaround Tuesday, 31st of March. Oh, is that when the 31st is? Yes, it is. Kamal says, so we have Steve, Greg, and Kamal expressing their views on gold slightly differently. 100%. That's what makes a market, right, Kamal? Dan says, Greg, yesterday I did take gold and sold this AM for a small profit because the 520 cross reversed. All right. Small profit's good. Small profit is acceptable. Bob says, a week ago I sold my rollover IRA funds and repositioned dollars in beat down mid and large cap stocks. Well diversified. Very nice. Very nice. So if you did it last week, then you've done pretty well, it looks like. Brian says, well, I got to go. I need to finish painting my sister's room. Take care, y'all. Brian has a lot of range. He paints. He trades. That sounds like a good young man right there. Thanks, Brian. Appreciate you coming, bud. Don't get paint all over your hands. Bob says, actually, I did it 12 trading days ago. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. Well, Bing He says, actually I did. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So maybe a touch underwater, depending on what you bought. Bing He says, Intel has a gap resistance on the 5th of March. Yep. Good eye, Bing He. Another thing to think about here on Intel also is, the 100-day, 50-day moving average up here as well. That's from Mount Doji, but I know he had to go. So Bing He, you don't have anything now, right? You got out of eBay, and Mount Doji has the Intel. Steve has the UGL. One thing I do want to say about gold, which is kind of just a thought here, but you see how we had the big gap up day? If you can hold the initial gap up day, right, here's the low of that gap up day. If you can hold this low for 3 trading days after it, the chances of gold going up higher is much higher. And we've held it for 1 day, we've held it for 2 days. If we can hold it for another day, doesn't mean that it can't go down, but it's a good sign if you have a gap up and you can hold that gap for 3 days. So hopefully we can hold that gap. Bob says, no, I'm well into the green. Okay, fantastic, right? Depends on what you bought. Glad to hear that. Bing He is flat. Dun, 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 dun. I don't think it's a bad place to be flat in, Bing He. I really don't. I really don't. Well, listen, thank you for sharing some of your trades with me and your thoughts. I appreciate it. It'll be interesting to see how things move forward. Just want to leave you off with a couple things. Please go out and try to do something nice for somebody today in this environment. Give somebody a call that might be alone or not have a lot of company. Just call them, check on them, right? It's nice to do something nice for somebody every day, and especially in a situation like this. And then also, like I said before, if you like today's podcast, if you could hit the thumbs up button, before you leave here, I would really, really appreciate that as well. And let's see. I think you're welcome, Dan. Zach says, heading out. Thanks, Greg. Thanks, Zach. Appreciate it, bud. Nice trade today on Beyond Meat. Gold is filling the gap on March 11th. Oh, yeah, to the left of it. To the left of it being he, but I mean to the right of the gap. Yeah, it did fill it over here, but not to the right side. So, okay. Well, I got snow outside, so I'm going to put on my snow boots, head on out of here. But thanks again, everyone. Really appreciate seeing everybody. Please stay safe. Don't touch your face. Wash your hands. And make sure you have a good risk to reward ratio, not only in trading, but in everything that you do in life. All right. Thanks again for coming. And hopefully see you tomorrow. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.